absolutely. In fact, I think the numbers are much better than what the street was expecting. We were working with Kotak estimates where they were expecting, a revenue growth of around 18 odd percent and margins of around 28 odd percent. So they've come in much better than that with a total income growth of around 20 odd percent, and they've come in at margins at around 30 odd percent, and that's really what stands out. Remember that the total revenue growth has been led by what we've seen in terms of chikungunya as well as dengue testing. Dr. Lal's has 70% of its operations only in the north part of India. They have a really strong market share within that particular region, and we've seen this entire outbreak which has taken place in this particular quarter of dengue and chikungunya. So the volumes were expected to rise. The volumes have risen, which has resulted in that 21% growth. The realizations were supposed to be capped, but there has been that operational efficiency which has come about, which has resulted in margins of over 30 odd percent. Remember, Q2 is also seasonally the best quarter for diagnostic companies, simply because of the reasons that I mentioned, that there is much more in terms of testing for malaria and other conditions because of the seasonality of the situation as well as the rains, etc. So this is expected, but it's much better than what was expected, simply because there has been an outbreak of dengue and chikungunya. But we really need to find out from the management how much they benefited from that and how much of it is just market share increase from, say, other unorganized and organized players coming to Dr. Lal's.